In this video, I am going to do the technical analysis of Dow Jones Index or Dow Jones Industrial Average Index for the week commencing from September 13th, 2021. I will cover this technical analysis in two parts, first on the weekly chart and then on the daily chart. So I'm going to start with the weekly chart first. Should you wish to learn the stock market strategies, options trading strategies, then I have given the links of my programs in the description of this video and also in the comment section. So you can take a look. Now let's do the technical analysis. So first, it's the weekly chart. So this is the weekly chart and these are the weekly candles. So here I'm talking about the weekly chart. So this is the weekly chart and these are the weekly candles. This last candle that was formed for the week of September 7th. So you can see that it's a very heavy bearish candle, very heavy bearish candle. So this candle, it was formed last time in for the week of June 14th. So after 2 months, okay, this candle has formed once again. Now, as such, the interpretation of this candle is that it is signifying a bearish trend in the market. Okay, but this bearish trend, it will be more clear on the daily chart. Okay, particularly the action in the market on Monday. If there will be a very heavy selling on Monday, then for sure the market, then it looks like that the market will enter into the correction. And if there will be some selling and if the market rebounds, in that case the market will keep its bull momentum here. So this was the interpretation here. Now if we talk about the technical indicators, so market has clearly, after a lot of months or after a lot of time, okay, the last time it crossed the SMA or it closed below the SMA, it was October 2020. So almost 1 year. It's been almost 1 year. So last time, so this was the time when market crossed below the SMA of and this SMA of the Bollinger Bands. But this time, so after 11 months or close to 12 months, so market has once again closed below the SMA on the weekly charts. Remember, it's a weekly chart. Okay, it's a weekly chart. So it is one of the indication that yes, that the market may be entering into the correction, but it will be more clear next week. So we need to see the candle of the next week. So if in the next week, if the weekly candle next week, if it closes below these three moving averages, so as of now it has closed below only one moving average, which is SMA. But if it closes below these three moving averages, okay, in this week, then yes, then there are very fair chances that the market is entering into the correction. So as of now, we cannot say that the market is truly entering into the correction. Now, if I do the technical analysis here, so first it is the moving averages. So moving averages, it is still means the EMA is still more than the WMA, okay, and but yes, it looks like that it is going to cross over. It is good. So see that the difference is very little here. So looks like that the EMAs are going to cross over. So for this thing to happen, we need to see what happens in the next week. What happens with the next candle? So next candle is going to play a very significant role here in the direction of the market. One more thing that I want to tell you here is that it's been more than a year or more than 15 months, you can say 12 sorry, more than 15 months. So last time when we have seen this crossover, it was okay, this crossover, it happened in the month of June 2020. Okay, so this was the last time when this crossover happened. So it's been 15 months, and for 15 months, or for more than a year, the market was in continuous bull run. Means the market was moving up. But now after 15 months, looks like that the market is entering into the correction. So we need to wait and we need to see whether this crossover happens in the coming week. Okay, but until then, yes, until then there is a weak bull trend. So for last 2 3 weeks I'm telling you that look, there is a weak bull trend. And last week I clearly told you that because there is that because there is heavy because there is there is weakness in the market. So be ready to see some action in the week of September 7th. And yes, there was this action, okay, here. So now the support and resistances are still the same, okay, as they are for last couple of months. So we have very heavy resistance here, which is at 35,700. Okay, and then we have some good support here, which is at 34,500. 34,500 here. Then another good support here, and it is at 33,600, you can say 3.6. And then finally a very critical support at 32,600. So what may happen is that if the market comes down, then it is going to first, it has to cross below these moving averages, and after crossing these moving averages, then it will look for some good support with the lower band of the Bollinger Band. Currently, it is at 33,667. So for the next week, it will increase to, okay, it may increase to 33,700. So then the market will try to hold at the lower band of the Bollinger Band, and slightly, and it can also come down to 33,600, this level. And then only it can try, or then only it may try to rebound. But for this thing to happen, okay, the condition is that the market must come down and close below these moving averages. Okay. um so there is a very weak bull trend in the market, very weak. Okay, now if we talk about some other indicators here. So okay, we have stock RSI. Stock RSI is clearly bearish, clearly bearish. Okay, MACD is again clearly bearish, because the MACD is less than the signal. Okay, and there is a and there is good difference between the MACD and the signal. And momentum, yes, there is some momentum building up, but this momentum is not enough. But this time this momentum is building up in favor of the bears, not the bulls. Divergence, okay, divergence is okay. So divergence is not a problem here. So through all of the technical indicators, okay, there is a very weak bull trend here, and the market is expected to come down. So you can say that there is a bearish trend in the market. There are bearish there are bearish sentiments in the market. So now to clear like what is going to happen, okay, or what may happen most precisely, let's move on to the daily chart. Okay, we are here on the daily chart. So this is the daily chart. So on this daily chart, okay, these are the daily candles. If you see this, the last candle, this is a very heavy bearish hammer. The interpretation of this candle is that there is a bearish sentiment in the market, and you can expect some fall in the market. Okay, now one more thing that is more critical here is that there is a moving average here. Okay, and this is one of the critical moving average, and also this moving average is at the lower boundary of the Ichimoku. So market is already into the Ichimoku, and this moving average is at the lower boundary of the Ichimoku. So what you need to see is that, like, if on Monday, if you see very heavy selling, or if you see that there is a gap down opening means somewhere here or here. So if you see some gap down opening, then you need to see, like, whether the market is able to sustain above this moving average or not. And if not, then for sure the market will come down. Okay. And if it is able to and if it is able to sustain, if it is able to sustain on this moving average, then you can expect a rebound in the market. But this rebound, okay, it will be a short term rebound, means these moving average that are coming here. So market will rebound to hit these moving averages and then will take a turn to come down, because overall the sentiments are bearish. Okay. So this was the interpretation of this candle, and this is what you can expect in the market to happen on Monday, Tuesday. Okay, and then in the subsequent days. Now, if we do the technical analysis here on the daily chart, okay, then first we have the moving averages. So on this moving averages, if you see that the market has closed below 3, 4, 5, below 5 of these moving averages. Okay, so it clearly says that there are bearish sentiments in the market. Okay, so so moving averages are clearly supporting a bearish trend here. Now, if we talk about the Ichimoku, then the market is in the Ichimoku cloud itself. Okay, but it has not crossed the Ichimoku cloud. So here I will say that we are in wait and watch mode. Okay, so you must not enter into the market until and unless you see a clear this thing, like whether the candle that is forming here, okay, whether it is forming below the Ichimoku cloud. Because once the candle formed below the Ichimoku cloud and below this the EMA, then only it is a confirmation that yes, it is 100% bearish trend here on the daily charts. Now, if we talk about some other technical indicators here, so on the chart we have okay, so we have stock RSI. So stock RSI is clearly bearish, because the K channel is zero. K channel is zero. MACD is also bearish, or you can say MACD is heavily bearish. Momentum, yep, there is absolute, means there is this good momentum here in the market, and this momentum this momentum is supporting the bearish trend. Okay, so there we have the momentum. And divergence indicator, yes, divergence is normal in this case. Okay, so divergence is not an issue. So all of these technical indicators here, they are supporting a bearish trend on the daily chart. So on the daily chart, it's a clear bearish trend. Okay. um, and also we have analyzed on the we have analyzed the same thing on the weekly chart. So weekly chart, there is again a bearish trend. So collectively we can say that yes, there is a bearish trend in the market. Market is in a weak bull trend. Okay, so what I advise here is that you should wait and watch, okay, until the market closes below the Ichimoku and the moving averages. So the moving averages and the Ichimoku, so you should wait and see, okay, until the market close below the moving averages and the Ichimoku. Then only it will be confirmed that there is a bearish that there is a bearish trend in the market. One more thing, in order to trade, okay, in order to make profits, what you need to do is that you need to wait. You need to wait until market takes a rebound. So for sure, okay, this is how the market works. Okay, because the market is in continuous bearish session. So there will be a rebound in the market. Whenever you see a rebound, means whenever you see a green candle that is formed here, so that will be the opportunity to sell. Okay, so you should use that opportunity to sell. So you will be selling at the top. Okay, and then after the rebound, then the market will come down, and when the market comes down here, then you buy. Okay, so this is how you are going to make money here. Okay guys, so this was my technical analysis on for Dow Jones Industrial Average Index for the week commencing from September 30.